All right, so we finished creating our adjusted trial balance. So the next thing I'm going to do now is move on to the financial statements. So the financial statements, there are 4 important financial statements that you need to know, right? You need to know your income statement, which tests profitability, okay? You have your statement of equity, which allows you to test and revalue the net worth of your equity. Okay, and then we have the balance sheet, which tests the accounting equation. Does your total assets equal your total liabilities plus your equity? And the last one is the statement of cash flows, okay, which is testing to see how much money you pulled in and how much money you actually spent, okay? So in this case, let's start with the very first one, okay? I have it outlined already on what are the few things that you need. Now, let's take a look at this financial statement very carefully. It is not the same thing as testing debits and credits, right? Even though there is 2 columns, you're not going to treat it like you're testing your debits and credits. You're going to treat it like you're calculating figures, right? You're going to use this as a means to separate your ideas and enter it in. Now, how we do the income statement is we're going to test, does the total amount of income that I've generated minus all the total of expenses I've incurred in order to operate my business, do I get a positive number, meaning I gained money, or did I spend too much money for my expenses and my amounts didn't cover the amount that I generated did not cover all the expenses, and I get a negative number? That means I have a loss. Okay, so in this case, right, this is exactly why I want you to use main accounts, because it makes it that much more easier to obtain the numbers and transfer them over into your income statement. So here I've already mapped out that for my total operating income. That's the first thing that you're going to do. So my operating income here is my main core of operations of how I generate my income, which is going to be my sales, right? Things that affect my sales are going to be my sales returns and allowances. So this should be capital sales returns and allowances. Okay, and it's also going to be my sales discounts. Okay, those things go against my total sales. So in this case, right, let's go ahead and take a look at what my total sales is. So when we're going to be doing our financial statements, we're primarily going to be using our adjusted trial balance, okay? So that's why every step needs to go in order. We completed our adjusted trial balance, so now we can move on forth to our financial statements. So where am I going to get these sales from? Directly from my adjusted trial balance, okay? So in this case, here it is. Let's take a look at my total sales, okay? So let's see. Here, my total sales account, right? Which includes all of this. So sales for the regular coffee, sales for the Supreme coffee, the ceramic coffee mugs, medium regular coffee, large regular coffee, medium Supreme coffee, and large Supreme coffee. These were my total sales. And right here, I have a grand total of $30,500.49 worth of sales. So I copied that in there. So that's how much total sales I generated throughout my entire month. Okay. Now, after I've done that, the next part is what are things that are going to counter against that. So in this case, my sales and returns or allowances is going to counter against my sales. So in this case, let's go ahead and take a look at my adjusted trial balance. What was my sales returns and allowances? Okay, in this case, I have a debit for $19.96, right? So in this case, I had a couple cups that I had to return, all right? So therefore, it's going to give me a negative 19.96 because, again, it goes against my total sales, okay? Other things that also go against it is my sales discount, right? Because I discounted the selling price. So I sold my coffee for significantly cheaper. So therefore, I didn't generate all the income that I could have gotten if I didn't have my sales discount. So in this case, I had a total of $1,900 worth of discounts. So in this case, I'm going to go ahead and calculate my total amount of sales. Okay? So in this case, I'm going to use my equals sum formula, right? I started out with a total sales of $30,000, right? I had to subtract $19.96 for my returns and subtract $1,900 worth of discounts. So in this case, what is my grand total amount of sales I've generated in the month of June? What was that? 28,000. 579.74. Good. So that's my total sales that I've generated. Now, the first thing that's going to be directly correlated to my sales is going to be the cost of goods sold and the cost of material, right? Because this is directly correlated to the products I sold, right? I sold some coffee. I sold some coffee cups. So in this case, I also need to counter against these as well. So this is going to subtract it. And when you subtract your cost of goods sold and your cost of materials from your total sales, this is your gross profit. Okay? Your gross profit is what you're going to see how much you had in grand total and see if it covered all of your operating expenses. So in this case, my cost of goods sold, right? You're going to go to your adjusted trial balance, which we did solve for the grand total. So my total cost of goods sold here for the regular Supreme and my ceramic coffee mugs gave me a total of $4,080. Okay? My total cost of materials, okay, was a grand total for the medium, large, sugar, and creamer. Gave me a total of $1040. Okay? So in this case, I now need to calculate what my grand total gross profit is. Okay? Starting with the $28,579.74. I subtracted out my cost of goods sold for $4,080.07, and I subtracted my cost of materials, which was $1040.79. So in this case, what is my grand total gross profit? $23,458.88. Good. Okay. So that's my gross profit. This is all directly related to just selling my product. Now I need to know if this amount of income that I've generated also covered all of my operating expenses. So in this case, right, what were my operating expenses? It's going to be anything that you encountered that helped you sold your product. So in this case, or helped you operate your business. So in this case, we have advertising expenses, our first one, okay, which we had it for $185. So that's my first operating expense I've encountered, okay? So let me, so the first one I have is advertising expense, okay? So advertising, I had that for a total of $185, right? So I'm putting this on the left side because I'm going to tally up the totals in this column right here, and I'm going to put that on my right column over here so then I can just add my numbers straight down. Okay, so in this case, I'm going to put it on my separate column on the left here to calculate my total operating expenses. So there you go. My first one was advertising expense. Okay. Let's see what my next operating expense was. It was bank fees, right? I had to collect money. I had to spend money. So in this case, I had some bank fees for a total of $268. Okay. Next operating expense I had was business expenses, right? I had to throw a party, right? I had to get some consulting work on my interior designing to operate my business, right? Which cost me $12.82. Okay. Let's see what's next. Okay. Freight expense. Freight expense, I have zero, so that's not going to affect my operating expenses at all because it's zero. So the next one after that is going to be insurance expense. Yes, I need to protect my store for in case of anything, right? So in this case, I spent $195 to have some insurance on my business. Okay. I've also incurred, right, interest expense because I got a business credit card and I also got a truck loan. So in this case, that's part of doing business, right? I needed a business credit card to buy, all the supplies that I need. I had to get a truck to deliver the coffees that I need to incur my sales. Okay. Let's see what else. I had labor expense, okay, right, which included remodeling my business as well as having somebody temporary work at my company at the store to sell products, okay. I also incurred license and a license expense because I need that in order to sell coffee. Right? I need permission to sell coffee. Okay? I also incurred loss on disposal of asset because in this case I needed to get rid of my furniture in order to buy new furniture. Okay? For my store. Okay? I've also used some office supplies, maybe especially for printing out invoices, right? Printing out bills and things like that. I incurred some office supplies for $70. Okay. I also had to pay my employees in order for me to generate my sales, right? I had to pay my employees to work the floor as well as deliver the coffees to my customers. So in this case, I encountered a total of $13.93.94 in payroll expenses. Okay. I also had to encounter, okay, so purchase expenses zero. Okay, purchase returns is zero, so that wouldn't affect my account by that much. Rent expense. I need a facility, right, to sell my coffee, to open up my shop. Okay. I've also incurred some bad debt because I let people borrow money, okay, or pay me later. So in this case, that is definitely something I had to expense in my business, okay. And I also had to adjust and use my depreciation as well as my amortization, okay, to adjust my fixed assets because they were used, okay. So again, that's all of my operating expenses. So let's tally up my totals, okay. So I have equal sum here, equal negative sum. So my grand total of operating expenses gave me a total of what? What was that? $1,300. Not 13,000. I did not use that much. So let's recalculate this again. Okay, so I got 11,667, 625, 7660, 1,500, 1,393, 70, 2,000, 375, 2,142, 101, 195, 1,282, 268, and 185. What is my grand total operating expenses? Excellent. 10,228.41. That's my total operating expenses. Okay. Okay, let me go ahead and make this note here. Total operating expenses. Oh, I put in the wrong line, so let me redo this. Okay. So there you go. That's my total operating expenses. Okay. Now there's one more thing I have here. Okay. And that's going to be other income. Okay. Can you think of what any other income I generated for my business? What was some the delivery? Excellent, right? Because in this case, that's separate, right? That's not my main core of operations. My only main core operations is to sell my coffee. Delivery income is extra. So in this case, delivery income is something I need to include because it belongs to other income. Okay? What was the total amount of my delivery income? It was $300, right? So then now I can go ahead and calculate whether I had a net profit or net loss. So once again, you're going to take your gross profit, okay? You're going to subtract your total operating expenses. Then you're going to add any extra income. Okay? So your other income, right? And if it's a positive number, you made a profit. If it's a negative number, you had a loss. So in this case, there you go. You're going to take your gross profit of your $23,458.88, subtract out your operating expenses of $10,228.41, and then you're going to add $300 of delivery income. And what's your grand total here? $13,530.47. Okay, so in this case, we got a positive number. That means we generated income. Yes. Okay, that means all of our operating expenses was less than what we generated. And we generated more money than that covered all of our expenses. So that means we have a total of $13,000 positive in our bank account. Okay? Now, what do we do with this profit? You have two choices, right? If it's a profit, you can either, one, pocket the profit, or two, reinvest it into your company. Now, in this case, right, best rule of thumb is you just opened up your business. Your best bet is you should just reinvest into your company, because don't forget, you owe a lot of money. Okay, you owe a loan for 28,000. You owe a credit card for 1,885. You owe other people, other vendors, a total of $3,000. So in this case, you shouldn't pocket this profit. Your best bet is you just open up your business. You should reinvest it into your company. So this is where this number is actually very important, because this is where, once you complete this worksheet, you move on to the next one, and they are connected. So in this case, we have a positive number, and now I'm going to move that, and I'm going to redeposit it and add it to my equity. So in this case, how do we do the statement of equity? Statement of equity, right? We're going to first start off with how much you started on June 1st. In this case, what was the total amount that I started in June 1st? Okay, so right now, my equity is currently at $30,000. Okay, that's what you started the company with. Okay, you had net income. Okay, what was your net income? Your net income came from your previous worksheet for your income statement, which was your $13,530.47. Okay, so this is me taking that extra profit and reinvesting it into my company. If you had a loss, you obviously, right, if you come out negative, who's going to pay for it? The company is. So that's going to come out from the value of your company. Okay? So in this case, if you have a loss, you only have one thing to do. You have to take it out from your company. But in this case, I have a profit, so I choose to reinvest into my company. Okay? Other things that affect equity is going to be anything like a capital contribution. So if I added more money to invest into the company, it's a capital contribution. If I decided to take money out, so in this case, an owner's withdrawal, which I did, I end up taking a total of $3,000, right? I withdrawed twice, or Bob Mason withdrawed from my company twice. Okay, the owner of the business took out money twice. So in this case, right now, I need to figure this out. What is the total amount of equity that I should be adding to my original equity? In this case, what is 13,000 minus 3,000 going to give me? Yep, 10,530.47. So this is what I'm actually putting into my company. All right, so that means my new ending balance in my equity, since I reinvested the money into my profits into the company, now my company is worth $40,530.47, opposed to just $30,000. Okay, and again, the more bigger your company is, possible chances of people who want to invest in you. Okay, so in this case, I invested $10,000 into my company, or reinvested. Okay, so this $40,530.47 is important because it's going to be a contributing feature of the very next financial worksheet. Okay, so the next one is going to be the balance sheet. Now, if you remember, the balance sheet is going to test the accounting equation. So here, I'm going to tally up all of my total assets. I'm going to tally up all my total liabilities, and the equity is going to come from where I solved it earlier, right, in my statement of equity, right? Okay, so let's go ahead and go through this. Now, you're going to be taking your main accounts from your adjusted trial balance. So again, once again, it's going to make it look more, concise, more cleaner, because it's going to be shorter, right? So we're going to start from the very first one for our adjusted trial balance. My first asset I have here is my bank account. Okay, my bank account. So in this case, my left side is going to be my assets. My right side is going to be my liabilities and equity. So that's what I'm going to do it here. Okay, so my bank right now, I currently have a grand total of $13,000 in my bank account. Okay, and I'm going to put dollar signs on here so it makes it a little more easier to read. Okay, so I have $13,000 in my bank account. Okay, my next asset I have here is going to be accounts receivable. Okay, which right now is outstanding at a grand total of $14,55.35. Okay, don't forget, this is the original amount of the $15.31 minus out the allowance for doubtful accounts. Okay, so at the end of the day, it's still $15.31, but you just subtracted out the allowance. Okay, all right, my next main account for assets is going to be business supplies. Okay, my business supplies right now has a grand total of $510. Okay, my next main account that's an asset is going to be office supplies. Okay, I still have $80 worth of my office supplies. Okay, then the next main account is going to be my inventory, which is a current asset, right? And I have a total of $540.64 worth of inventory left. Okay? All right, and I believe next is going to be my fixed assets. So the first fixed asset I have here is my furniture account. So once again, I'm going to put the real amount that's currently in my assets right now. So right now, I currently have $8,000 and $926 worth of furniture, okay, at book value. Next one is going to be my office equipment, right? My computer, printer, and cash register is currently at a grand total of $2,767.76. Okay. I also have my next fixed asset is going to be equipment. Okay, main account for $8,483. Oh, sorry, 85. Okay. All right. Next fixed asset I have on this list is going to be my vehicles. Okay. For 31,000. And then let's see what's next. Then I'm going to put my intangibles or my other assets. So in this case, my first other asset is going to be my prepaid accounts, which is currently outstanding for 6654.17. I have deposits. Okay. That's currently outstanding for $1,700. And last but not least, I have goodwill, which is intellectual property, right? For a total of 2088. Okay? So what I'm going to do here is these are all of my assets. All of my current assets, including current assets, fixed assets, and other assets. Now, of course, if you want to, you can have those labels so you can understand, oh, these are my current assets, these are my fixed assets, and these are my other assets. It's optional, but in this case, if you did your trial balance in that exact order, it's straightforward. You just pull all the assets in that exact order. Okay? And I get a grand total of $79,111.95 worth of assets. Okay? So that's just half of the equation, right? I still need to figure out my total liabilities plus my equity. So starting with liabilities, so I'm going to go ahead and put in right here. These are my liabilities. So first liability that I have here is going to be my accounts payable. Okay? Accounts payable is my first liability. Okay? And I'm going to go on the right side now because, again, left side's meant for my assets, right side is for my liabilities and my equity. So in this case, my liabilities, right? First liability is going to be my accounts payable for $6,547. Okay. My next liability, okay, would have been Visa payable, but I have zero balance on there, so that's not going to affect my balance sheet here. Right, and so the next one's going to be notes payable for the $649.49. Okay. And then my next set of liabilities is going to be my payroll liabilities. So all the components that are, paying my employees, paying into their FICA, FUTA, SUTA, workers' compensation, all of that is going to give me a grand total of $791.54. Okay. Then I have, let's see what else I have. My next liability I have is sales tax payable. Okay, right? I still owe the government money, okay, for doing business for a total of $2,046.11. Okay. Next liability here is my interest payable, right? I owe money to my interest for borrowing money on a credit card as well as the bank loan, okay, or truck loan for a total of $101.34. And then last but not least, you have your loans, right, which includes the truck loan, okay, which gives me a grand total of $28,445.14. Okay, so here I'm going to gather up my total liabilities. Okay, and I get a total of $38,581.48. Okay? That's only one part of this equation, right? I need to add my equity. And that's exactly what you're going to add here is your owner's equity. Now, what number are we going to take from this owner's equity is going to be what you solved for in your statement of owner's equity. So in this case, my new equity as of June 30th is going to be the $40,530.47. So as the accounting equation is, your assets is going to equal your total liabilities plus your equity. So that's exactly what this column is here, is what is your total liabilities, which is this, plus your equity going to equal. In this case, it equals 79,111.95. So in this case, does my total assets right here equal my total liabilities and equity? Yes, it does. I even put the formula right here to prove that there's no discrepancy here, that it's 0. Okay, so in this case, yes, I'm successfully completed my balance sheet. I tested that all of my assets should equal my liabilities plus my new equity that I've incurred from my previous financial worksheet. Okay. All right. So far, so good. Okay.
Yep.
All right. Let's move on to the very, very last financial worksheet. Okay. All right. Last financial worksheet's going to be your statement of cash flows. Your statement of cash flows is actually pretty tricky. To really truly understand the statement of cash flows is more or less you're taking an accrual type of business and you're converting it into cash basis, okay? Because what the real goal here is, you're looking to see how much actual cash flowed into your company and how much actual cash flowed out from your company, okay? So it's broken into 3 categories. Okay, it's broken into your operating activities, your investing activities, and your financing activities. Okay, and what we're going to be doing here is we're going to be testing the number one thing is, does it equal the total cash that you currently have when you began the company versus to what you have right now at the end of the month? Okay, and that's the goal of the statement of cash flows. Did you properly where did the money go, basically, right? Did it come when you pulled it in? Where did it go? So that's the statement of cash flows. So to start off all of this, right, we're going to start off by your net income. So what the statement of cash flows do is, it is a combination of your income statement as well as your balance sheet. So a lot of these accounts that we will be using is primarily going to come from your balance sheet. Okay, so that's why they have to go in a particular order. However, there are some rules and things that you need to know. For instance, right, what was the total amount of purchases that you bought for furniture? You can't take the balance sheet because the balance sheet has the current book value. You need to go back into your unadjusted trial balance to get those numbers, to get the actual proper number that you actually purchased your fixed assets with. Okay? And we'll talk about that when we get into more things. Okay? But first off, we're going to start off with the very first thing is introducing the net income. So the net income, right, was our means to generate money, right? So in this case, what was my total net income? Well, we'd already solved for it in my income statement, right? My net income gave me a total of $13,530.47. Okay? Now, keep in mind that net income had sales that we generated using accounts receivable. So in this case, was that actual real cash that we got? No, it isn't. Okay, so that's why we need to calculate, subtract things that we do have versus things that we don't have. Okay, so that's why when we break it down, how we break it down is so again, you break down each one by their activity. So your operating activity, okay, is going to break down your current assets, your other assets, as well as your current liabilities. Okay, so let's start with that first. But before we do that, there's also one more key feature that you also need to know as well, is you had some non-cash transactions. And what are non-cash transactions? Non-cash transactions are in terms of understanding that, did I really spend money to depreciate my assets? No, I didn't spend $61.16 to depreciate my I don't know, what was it, computer? I didn't spend that money. That's going to be considered a non-cash transaction because in the books, you said that you did spend the money, but in reality you didn't. You just transferred from one account to another. That's the idea of a non-cash transaction, because in our books, my computer is still 18,000 whatever that I 1840 something, right? I didn't take the money out from my fixed asset. In this case, I created invisible money to represent that I spent money to depreciate it. So that's called a non-cash transaction. So your operating expenses is going to include your non-cash transactions, which there are 3, right? We have bad debt, depreciation, and amortization, right? Because bad debt, did we actually take a loss? No. We didn't spend $76.60 to say that we incurred bad debt. We didn't pay for that. And the amount that our customers owe me is still $1,500, right? That value didn't change. So in this case, that's considered a non-cash transaction. Okay? So that's what you're going to list out first, is your non-cash transaction, which we already mentioned before. It's going to be your bad debt, your depreciation expense, and your amortization. So again, you go to your income statement, right? Because I said your statement of cash flows is a combination of your income statement and your balance sheet. And we're going to go ahead and copy in the bad debt, the depreciation expense, as well as your amortization. Now in this case, right, what am I going to do with these numbers? Now these numbers, right, we subtracted it out from our income, right? In this case, this is a non-cash transaction. We didn't spend this money to depreciate my assets, right? This is a invisible money that I represented to say I used or spent this money to use these assets, right? So in this case, because I originally took it out from my net income, I need to add it back. Okay, so in this case, I need to add back my bad debt because, again, I didn't really spend $76. I need to add back my depreciation because in this case, I didn't spend $625 for my fixed assets, and I need to add back my amortization. Okay, right? Then the next set of portion is going to be your current assets. Okay, besides the bank, right? Let's go ahead and take a look at my balance sheet. What's the first current asset I have on here? Okay? I have accounts receivable. Okay? Now, this is how we have to understand it. Accounts receivable right now is this one. You need to go into your unadjusted trial balance because the one that you have on your balance sheet includes the bad debt that we took out, right? We took out the 7660, right? Because I add it back into my net income, I don't want to double dip it. So I need to go back to my either adjusted trial balance or unadjusted, whichever one that you can figure out, and say that, well, I have $15,000 or $1,531.95 outstanding. This is what people owe me. Okay? Now, when I understand that, is this money that I actually received? This is people that owe me money. Did I actually receive cash from these people? No. So what you have to do is this becomes negative because it's part of your net income. You never received it. So that's cash you never received. So in this case, that's what you have to do. You're going to have to go through every single account and ask you, did you have the money? Did you spend the money? Do you have the money? And in this case, accounts receivable, we never received the money. So therefore, this is something that we need to subtract out from your net income. Okay, so again, you need to find that through your adjusted trial balance because your balance sheet has the amount including the bad debt. Okay, so in this case, I need to subtract out the $1,531.95 because this is money I did not receive. Okay, this is cash I never received. Okay. So let's see what the next one is going to be for your balance sheet. Next one is going to be your business supplies. Okay? Now, question here is business supplies. Is this something that you already spent? You already spent the money to buy the business supplies, right? Is that cash that you have now or is that cash you already spent? So this $510, do you actually have this in cash?
What's the yes?
Well, I mean, you bought the business supplies, didn't you? So do you actually have cash value right now in your hands? No, you already spent the $500 to buy the business supplies. So in this case, if you bought something, that's going to be considered something that you don't have the money for. So you're going to subtract that out from your net income because you already spent the money to buy the business supplies. Okay. So then let's see what's next. Next is office supplies. In this case, I have $80 left, right? Do I still have the $80 or did I already spend that $80 to buy the business supplies or to buy the office supplies? Okay. So same thing with the business supplies. You don't have the $80. You already spent it to buy the office supplies. Okay. So let's see what the next account is going to be. Next account is going to be inventory. Okay, inventory is your current asset. Okay, now here's the trick question here. Okay, inventory. Right now, I currently have a total of $540.64 worth of inventory. Is this cash that I have right now? Is this $540.64 cash that I have right now?
No.
No. Why? Here's one thing. You already spent the money to buy the inventory. Second thing is you didn't sell your inventory, right? This is things that you already purchased, so you spent the money and you haven't sold it yet. So in this case, this is money that you don't have yet. Okay, so that's something you have to subtract out. Okay, so that's all of my current assets. Okay, don't forget to include your other assets as well. Okay, so your other assets are going to include, let me see your balance sheet. So obviously furniture is a fixed asset, office equipment's fixed, equipment's fixed, vehicles is fixed. Your first other assets going to be your prepaid accounts, your deposits, and your goodwill. Okay? Same question here. Prepaid accounts. Is this money that you have? Because we spent the money to buy insurance and we also spent the money to buy rent. Is this money that we have right now? No, I already spent it. So in this case, I have to subtract it out. Okay? What about the deposits? Is this money that I actually have right now? No, I had to give it to the landlord to hold on for me, right? I had to do a 100 deposit for the water, for the electricity, for the gas, right? So in this case, no, that's money that we don't actually have physically on our hands. It's money that we had to spend, okay? And goodwill, okay? So in this case, goodwill, right? Do we actually have 2,000? Okay, so in this case, this includes the amortization. So I need to go to my adjusted trial balance to get me the real number of my goodwill. So my goodwill right now is currently 2,100. Okay, hold on, where's my goodwill? Goodwill. Okay, goodwill. Goodwill. My current amount is 2,100. Okay? Do I have that $2,100 in cash?
No.
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 I had to purchase it, right? In this case, if I spent $2,100 just to acquire the business name. So in this case, no, I don't have this cash right here, okay? So what you're going to notice is that all your assets are going to be minus. They're going to be subtracted out from your net income, okay? So now that I went through my current assets and my other assets, now I need to go through my current liabilities, okay? So bank balance sheet, your first current asset is current liability is going to be an accounts payable, okay? So here's a question, okay? Right now, I have a total of $6,547.86. Did I pay for any of these bills that I owe? Did I pay anything into my $6,547 that I owe?
No.
No, you didn't pay a dime. That's why you owe it, right? So in this case, if you owe this money, that means you never spent the money. So therefore, this is where you're going to have to add this back into your net income because it's money that you haven't paid for. You haven't spent the money. Okay? So therefore, I never paid for it. That means I need to add it back in there. Okay? Your next current liability, okay, is your notes payable. Right? This one's straightforward. I haven't budged a dime. I didn't pay for it at all, so I still owe $649.49. So therefore, I need to add that back into my net income. Okay? Let's see what's next. What else did I add back in here? So in this case, payroll liabilities. Did I pay the government any money? Did I pay them any dollars in regards to having employees? No, right? I'm still holding on the $791 for having employees. So in this case, no, I haven't paid a dime, so therefore I still have the cash in my hands. Okay? So I need to add that back. Okay? Let's see. Let's see. Sales tax payable. Same thing, right? We still owe the state and local agencies $2,046. So in this case, I never paid for it, so therefore I still have it left in my bank account. Okay? And the last thing I have here is interest income or interest payable, okay, because loans is a long-term liability, so that doesn't count. So short-term, or in this case current, is going to be interest payable, which I owe $101.34, which I haven't paid for. So therefore, I still have the money. Okay? So let's go ahead and determine what your net operating activities are. Okay, so in this case, I'm going to equal sum this, and then on the right side, I'm going to calculate it against my net income. So first, let me get the grand total of your operating activities. Okay, so in this case, we're going to add up all of this. So 76. Okay, you're going to add 76, you're going to add the 625, you add the 1167, you're going to subtract out 1531, subtract 510, subtract 80, subtract 540, subtract 6654, subtract 1700, subtract 2100. You're going to add the 6547, add 649.49, add 791, add 2046, and add 101.34. Okay, and what number do you get here? Okay. I get a grand total of a negative $2,266.30. Okay, so what I'm going to do here is going to be my net. My net means you're going to take this amount of the 2,000 and you're going to subtract it out of your net income. Okay, so 13,000, right, is my net income, and I'm going to subtract out this $2,000 to get me a total of $11,000 after taking the operating activities out. Okay? So that's what I should get right now. All right? Next is going to be investing activities. So my investing activities is going to be anything that's a fixed asset. So purchasing furniture, purchasing office equipment, and purchasing a vehicle is going to fall under investing. So again, I'm investing by buying fixed assets to operate my business. Now in this case, right, if I take a look at my balance sheet, my furniture right now, this is the current book value. You cannot use these numbers because you did not purchase your furniture at $8,926, right? You purchased it for, I believe it was like $9,000, right? This is what my book value is at the end after I depreciated it. So one thing I need to do is I cannot use that number. I have to use my number that I found out either in my adjusted trial balance or my unadjusted trial balance. Okay, so in this case, you have to go to your unadjusted trial balance. okay? Because this one has the total amount of furniture that you purchased originally at historical cost. So in this case, let's take a look at my fixed assets here. So furniture. So I purchased a total of furniture to be $9,033.75. Now, here's the question. Since I purchased my furniture for the $9,000, right? Is that money that I have right now, or is that money that I spent?
Money that you spent.
Money that you spent, right? So therefore, that's cash I don't have. So if this is cash I don't have, what happens is I'm going to subtract it out from my net right here, my net operating activities, right? Because in this case, I don't have this. I spent the money to buy furniture, okay? So then let's see what the next, so let me do balance sheet. So the next account that I have here is going to be, so I got furniture, we have office equipment, we also purchased equipment, and we also purchased a vehicle, okay? That is all for my fixed assets, okay? Now I have to go back to my unadjusted trial balance to see what the real value is for my historical cost value. So in this case, what was the total amount of office equipment I bought? So unadjusted trial balance. So office equipment, I purchased a total of $2,863. Since I purchased it, I no longer have this cash. Okay, so I spent the $2,863. Okay? Same thing for my equipment, right? I paid it, if you remember, I paid it off by writing a check, right? I actually spent the cash that I had in my bank account to pay for all of these fixed assets. So in this case, for my equipment, I went to the actual physical store, or in this case, I paid it off with my bills, right? Because I received a couple bills and I paid it off at the end of June, right? So it got me a grand total of $8,650, right? And then, of course, vehicles. How much was my vehicle when I purchased it? It was $32,208.80. Okay? Or 90 cents. Okay? So in this case, that's my total investing activities. So I need to calculate what my total investing is. So in this case, equal sum. Total investing activities is going to give me negative $52,756.71. So what I'm going to take this number is I'm going to counter against my net operating activities. So in this case, I'm going to take my 11,000, okay, and I'm going to subtract out this $52,000. And I'm going to get a total of negative $41,492.54. Which is true, right? Which is true because I spent $52,000 in investing into my company. Okay? So therefore, I should be at a negative 41,492. Okay? Now your financing. Your financing is going to be your long-term liabilities as well as your equity. Okay? So first thing here is your long-term liabilities. So the first long-term liability is going to be a loan. Okay? Now, let's answer this question. If you got a loan, what does that mean? Did you get cash or did you spend cash?
You got
You got cash, right? You took a loan out. That means you have the cash to buy whatever you'd like. In this case, it was a truck loan, so you got the money to buy the vehicle. Okay? So in this case, since I got money for this, it's positive. Okay? So I'm going to go into my truck loans. Now, because my truck loan, okay, in this case, because if you look at the top of there, my accounts payable includes a portion of my truck loan. So therefore, I'm going to take whatever a balance I have in my balance sheet and plug it in, because I currently got $28,000. Even though when you took out the loan, it was $29,000, but because a part of the loan is put into your accounts payable, right? You just have to take whatever you put for your balance sheet on here. Okay? So this is money that I received. Okay? Now, other contributing factors is going to be your equity, right? Well, let's go back to the equity. So right now, my equity is currently on my balance sheet a total of $40,530, right? But this includes my net income. So I have to backtrack that because I already have my net income at the top of my incomes, at the top of my statement of cash flows. So that means I need to subtract that out. So therefore, I'm left with 27,000, right? In this case, that's exactly what I have to do. I need to see how much money did I invest into the actual company. What was the amount that I started out with? In this case, I started out with my company at $30,000. So in this case, is that money that I have? Absolutely, right? We took our own money and we dropped it into our bank account to have for our to run our business, right? So we invested $30,000. So that is cash that we actually have. So in this case, you have to go to your statement of equity to get the original amount of money that you invested into your company. However, you also took money away from your company. So that right there, right, tells me I also took money away. So therefore, that's also going to backtrack on my end, right? Because that's money I took out to finance my business. Okay. So in this case, I need to now solve for my total financing activities here. Okay. So let's see what that is. Okay, so I'm going to take my 28,000, I'm going to add 30,000 while minusing 3,000. Okay, which will give me $55,000. Okay, so I'm going to take my net investing of the negative 41,000, okay, and I'm going to add the financing activities of 55,000, okay, and that's going to give me $13,552.60. Okay, and where do we see this? Okay, this is your net change in the cash flow that you started out with. Now let's take a look at here. What was the amount in your bank account when you started out on June 1st? Well, realistically, on June 1st, you didn't have anything in your bank account. So, by the end, right, if you had $0 to begin with and you had your total net financing to be a positive $13,952.60, this should match your total bank in your bank statement, which does. You have $13,952.60 in your bank account as of June 30th. And this is where everything is pans out correct, right? Everything matches, okay? So that's how you complete the financial statements, okay? You're going to start with your income statement to solve for your net income, which is going to take all of your generated income, minus out all of your expenses to get either a positive or negative number. Okay, you're going to reinvest it into your company by adding it to your equity. Okay, anything that affects equity is going to be any extra capital contributions or any withdrawals. So if you took money out from your company, it's going to decrease your equity. So once you solve for this equity of $40,530.47, right, you're going to test the accounting equation. Is this true? Does your total assets equal your total liabilities plus your new equity? In this case, it does. It pans out to be $79,111.95. Okay? And then the last thing that we got to do is we got to do a combination between the income statement and the balance sheet plus, the unadjusted trial balance, right? And we're going to pan out to see how much money actually flowed into the company and how it came out. Now, if you remember, this was purely from the income statement and the balance sheet. So that's why it's a combination of the two. All right? And that's why when we figure it out and we divide it by the 3 sections, operating activities, financing activities, and investing activities, we're going to test to see, is it true when you started out the company and then when you end the company, is this how much cash you should have left over? And it does pan out. It matches what we have on our balance sheet. Okay? Any questions in regards to completing the financial statements?